Hey guys, I'm back with another potential trading video for today. It's Monday, April 14th. The market is not quite open yet, but I'm just trying to look at some of my potential strategies and trades for today. And one thing I'm really liking is SPY right now. If you look at SPY, the nice thing about SPY, like I mentioned before, is that it has 3 expiration dates for its options every week. So today being Monday, there are options that are expiring today. So if you want some quick, easy money, in my opinion, SPY closed Thursday evening at 278.20. And remember, the market wasn't open on Friday because it was Good Friday. So if you look at a out-of-the-money strike price of, let's say, 270, first of all, that gives you $8.20 of a cushion between what SPY is right now and your option strike price. So if you sell a put at a strike price of 270, you'll net $104 of premium, because remember, it's $1.04 per share and every contract is 100 shares. You'll net $104 today for just doing nothing except for just holding $27,000 of cash in your account. And that would be what's called a cash covered put. If you don't have the 27,000, it's more risky, because if SPY does get to 270 or less by 4 p.m. today, then you're going to get assigned 100 shares of SPY at $270 each. So you're going to be on the hook for $27,000. Now, if you don't have a margin account, your platform should not let you do this, but I thankfully do have the 27,000 in my account. So this would be a cash covered put for me. So worst case scenario, if SPY does get to 270 or less, then I'm going to get assigned 100 shares of SPY, which I'm okay with because I like SPY as a stock anyway. And a stock like SPY, if you hold it long enough, even if we go into a dip or a recession, it's going to come back up eventually. So I don't think I'm ever going to lose money on SPY, even if I do get assigned the shares, as long as I hold it long enough. But the nice thing is that worst case scenario, and you do get assigned those 100 shares of SPY, well then I can turn around and sell covered calls on SPY. And if I sell covered calls at this 270 strike price, eventually, if I wait long enough, SPY is going to get to 270 again, and those shares are going to get called away. So I'll have rode the wave down and then rode the wave back up. But while I'm riding the wave, I'm going to be collecting premiums by selling the cash covered put initially, and then selling the covered calls on the way back up. And this is called the wheel strategy. So most people, if they just like SPY and they just want to invest in SPY outright, they'll just buy the shares at, let's say, 270, and they'll ride the wave up and down. But let's say SPY goes from 270 to 260 to 250, back up to 260, then back up to 270, and they want to sell out at 270 again. Well, they made a net profit of 0, right? Because they rode the wave back down, and they rode it back up to where they started. I'm doing the same thing, but I'm collecting premiums along the way. So although the stock price is net 0, I'm overall profitable because I collected profits on the way down and then back on the way up. So that's why I really like the theta gang strategy, they call it, because I'm just using time to my favor. But like I said, as long as SPY stays above 270 by 4 p.m. today, I'm collecting $104 per contract. Now, if you have even more money, if you have double $27,000 in your contract, let's say you have, or in your account, let's say you have $60,000, then you'll collect $208 if you want to sell 2 cash covered puts at a time. Now, if you think about it, since SPY has 3 expiration dates a week, you could run this strategy by selling cash covered puts 3 times a week. So you could sell cash covered puts and make $104 each time, potentially, times 3 times. So you're making $300 a week for doing nothing, literally just for holding cash in your account. I mean, your bank account, your savings account, is not giving you $300 a week in interest. So you could almost use this as your bank account, because this money is still liquid, and just make a real good amount of interest on it every week, which is a really good strategy. I mean, it's low risk and low reward, but I'm a fan of the low risk strategies. I want to take the easy money and just scalp the profits. So let me know what you think about this trade below. If I come up with anything else, I'll let you know as the day goes on. But the first thing to keep in mind is you want to do this strategy with stocks that you wouldn't mind holding. Don't do this with stocks like Royal Caribbean or Delta or any of the cruise or airline stocks right now that a lot of people are trading options on, because they're just too variable and you don't know if these companies are going to go bankrupt or what's going to happen, if they're going to get bailout or not. Something like SPY, which tracks the S&P 500, it's going to go up over time as long as you hold it long enough, right? Other stocks like Norwegian or Carnival Cruise Lines, you don't know what they're going to do. They could go up, they could go down, they could stay down for years. You have no idea. So that's why the first thing you have to keep in mind is pick a good stock. And I know $27,000 is a lot for most people to have in their account, but you can pick a good stock that you wouldn't mind holding that's cheaper. Just remember that you want to have whatever the stock price is times 100 in your account in case you get called away. I mean, for example, if you look at Coca-Cola, Coca-Cola is trading at $49 right now. That's another pretty good stock, right? Coca-Cola's been around for a while. It's probably not going to go anywhere anytime soon. So at a price of $49, if you use the same strategy and sell a cash covered put, I mean, here's Coca-Cola right now. And this is for April 17th, remember, because Coca-Cola doesn't have as many strikes or as many expiration dates per week as SPY does. So let's say you want to do a, I don't know, $43 strike price, which is out of the money. Well, if you sold the cash covered call, you net $14 by Friday. So if Coca-Cola stays above $43 by end of close Friday, you'll net $14. Now, to you that might not seem like a lot, it's just 14 bucks. But think about it, you only have to keep $4,300 in your account, right? That's a lot different than $27,000. So if I just open up the calculator and you say, all right, my potential risk, and I use risk lightly because the risk is that you're just going to get assigned 100 shares. You're not quite actually losing money. But if you say, I'm going to earn $14 over the course of, or by having $4,300 at risk in my account, well, that's 0.03%. And to you, that might not seem like a lot, but let's say you do this every week for 52 weeks. That's a return of almost 17%. I guarantee you that your savings account or your, online checking account is not giving you a 17% return on your money every year. So if you were to do that, and remember, I mean, this is not accurate because this is going to compound over time, but just say $4,300 times 1.17, 17%. Well, your $4,300 turned into $5,031 at a minimum. And like I said, this is not actually correct because the stock price is going to move every week as you, as time changes. But you're going to be left with at least $5,031 at the end of the year. And you're doing nothing besides holding cash in your account. So let me know what you think. If you have any questions about the wheel strategy or about the Theta Gang, let me know in the comments below. I answer all the questions and comments. So yeah, thanks for watching and happy trading.